Alrighty. Good morning. Hey Jan B. Hey Steve. Hey Diana. Hey Snowflakes. Hey Bia. How you all doing today? Remember, I've got to turn on trading view as well. You can hear me okay, see me all right. Put it into the chat. Let me know. Hi Bill. Good morning. As usual, we'll give it a couple of minutes before we get started. Hey Ola. Very good. Thanks for that, Bill. Good morning, Spiros. I am, Diana. Well, we did have a stream yesterday, so it was good yesterday already. A couple of minutes before we get started. Hope you all had a good rest, a good holiday yesterday. Does look like markets will come back with a bang for today. If you did get into any trades, do share it. Let me know what trades you got into yesterday. 2 more minutes and we shall get going. If you're new to the session, drop a message, say hi. Hi Haida, how are you doing? Do remember to click that thumbs up button on YouTube. Hi Suki. Everyone is streaming in. And again, if you haven't already, do join the trading community. The link is there on YouTube. We are also streaming across a few other platforms. If you are on the other platforms, just Twitch and a few others, do drop a message and say hi as well. And if you were wondering, no, I haven't got the Twitch link yet. I still can't figure out that link. The stream on TradingView doesn't seem to be working too well. So if you are watching on, or if you are trying to jump onto the stream on TradingView, you might want to check out the YouTube channel instead. Good morning, Stefan. All right, let's get started. So again, a big welcome. Thank you for joining me on this daily market analysis. We do this every day, 3 p.m. GMT plus 8. Have been doing this for the last couple of months already. So good to have you guys setting your time to come and join me on this session. If you are a regular, I know who the regulars are. If you're for the regulars, a big welcome and thank you for joining me. If you're new to the session, do drop a message, say hi, let me know where you're joining from. The link is there for the Discord group. Do join. We can, it's free to join. We can take our discussions before this daily market analysis and beyond this daily market analysis as well, where we'll be sharing with you some trade ideas, any trade setups that I see or any of our members see. We'll be sharing trade ideas there. So if you haven't already, do make sure you join. So we had a little bit of, well, yesterday was, most markets were closed. It was very quiet. We did see some major or some very brief speculation or spikes in prices, especially on gold, which it shot up and then retraced almost immediately. I'll share with you about that later on. Uh, but if you do have any trading related questions, any particular pairs you'd like me to look into, do put it into the chat. Let me know. I'll be happy to take those on board. Hey Gokhan, good to see you. Moshi Moshi to you too. Right, with that, let's get going. A quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence because the contents of this webinar is not intended to be a recommendation to trade a financial product. You all have different trading styles, different approaches to the market. What I intend for this session is really to share with you how I view the markets, where I think prices could get to. So if you do, being on this session, you can use this as a bit of a support with your own analysis. If it aligns, you might have more confidence with your trade or the expectation of where price could get towards. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Please remember that if you do jump into all the trades, if you do put in all the orders that we do describe during this session, you will most likely be over leveraged. You will most likely be trading with more over trading, right? So please manage the risk. That's number one. That's key. And also the trade sizing, which affects your trading psychology as well. Okay, so with that said, let's keep going on. Good morning, Buba. How are you doing? So, like I was sharing with you yesterday, we had markets pretty much on holiday. The Swiss were on holiday, the UK were on holiday, French, German, the US were all on holiday. Nothing much happened. Prices pretty much set in a horizontal with not a lot happening, right? Apart from, and I want to share this with you, you can see that the dollar index pretty much sat right across all the way to this morning where it spiked down, where the activity started, but pretty much sat right across through the sessions yesterday. The big price mover was gold. Right, was gold, where I was anticipating it was going to sit in a range, but it actually spiked up from 1943 straight up to 1970, hit that resistance level and came straight back down again. Within the hour, a big spike up and then resumption back down again. So no big reason why that happened. I do think that it might be a little bit of a speculative move because of the anticipation that there might be some uncertainty in terms of the agreement for the US debt ceiling crisis. Right, the agreement was set out, but there were some concerns that it might not get the votes to push it through. That's why we saw that big spike and then a resumption back down again. So that was yesterday. Moving on from yesterday, what we have today, we just had this being released. The Swiss GDP number quarter on quarter was 0%, expected a 0.1%, was released at 0.3, right? Was released at 0.3. So that was a little bit of a better than expected GDP, but I think that what we saw on the Swiss franc, where was it? The dollar Swissy shot up, and then at 3 o'clock, right now we're seeing some pushback up. It is still highly driven by the strength or the volatility of the dollar index, not so much because of the GDP, right? From the Swiss GDP quarter on quarter, not so much because of the Swiss GDP data that was released. It's still back down to how the dollar index is moving. With that, what else we saw, or what else we have in store for us today is not a lot, right? Not a lot. We do have some euro news. I don't think this will be big price movers. Consumer sentiment for the US possibly dropping a little bit from 101.3 to 99.1. Most likely, no previous data. Most likely it's going to show a little bit of a drop, but I think we're still possibly going to see the dollar index continue with its current trend, mostly driven by the speculation on the debt ceiling. Right, so talking about the debt ceiling, there was that facing this news here, or this headline here, facing uncertainty as debt ceiling agreement lingers. Right, it's not exactly a done and dusted deal. It's still there. It's still a little bit pending, but most likely it is just a little bit of politics in play. I do think that it will get passed. It hasn't, and there was no scenario where we saw the US go into default. And like I was sharing in the group, no party wants to be the one holding back an agreement to cause the US to go into default. Because if the US does go into a default, it's not only going to affect the US economy drastically, it's going to also affect the world. It's going to be a global issue. Okay, so because we're also pegged against the dollar, it's going to affect everyone. So I don't think any party wants to be the reason for the default. So I think it's just a little bit of brinksmanship to get their point across or to get the agreement signed, possibly at the last moment. With that, what else do we have for tomorrow? 7 a.m. tomorrow, we do have RBA Governor Lowe speaking, and this is at the Senate Economics Legislation Committee. I don't think it's going to do too much to the Aussie dollar, but what we want to pay attention to is the CPI year on year for the Aussie. It was 3.6%. Oddly, it is expected to climb slightly to 6.4%. Why I say oddly is because we have been seeing CPI or inflation growth slow down quite significantly in March. It was 8.4, dropped down to 7.4. End of March, 7.4 down to 6.8, 6.8 down to 6.3. So I'm a little bit surprised that they are anticipating for it to climb slightly. This also might be a good setup to possibly lead a little bit of an upset in the CPI data release. We could see it drop to maybe 6%. I think maybe 6 or 6.1%. And if that does happen, then we might see some further weakness in the Aussie dollar, given that a further slowdown in CPI data is going to signal to the RBA that they could pause on further rate increases. From memory, I do think that they are factoring one more rate increase before a pause, but that could reinforce the idea that a pause is a suitable action in the next coming RBA meetings. Okay, so that's one thing to pay attention to tomorrow at 9:30 GMT plus 8. All right. Good morning, Godfrey. How are you doing? Hi, Jamil. Hey, Desiree. How are you doing? Good to see you here. Okay, and then through that, tomorrow we do have the Euro, German preliminary CPI, and French CPI numbers to be released, Italian CPI numbers to be released, and then the CAD with the GDP, but we'll get through that tomorrow during the session as well. Okay, so with all that, let's jump onto the charts. Look at the dollar index. So updating this, we are heading towards half of the year gone already, right? A couple more days to June. So heading towards the mid of the year. The dollar index, we were saying that's going to consolidate between 104 and 104.40. That was at that point, it did actually consolidated just below 104.40, and through today actually pushed up. So early this morning it came down, tested 104 again, pushed up as high as 104.50. Okay, I do think that we are going to see the dollar index break through this 104.50 level and possibly climb towards 104.80. Why 104.80? Looking at the H4 time frame, let's zoom in a little bit. So that was the body of the previous swing high at 104.80. If you took the tail of that, that'd be 105, almost at 105 round number. Okay, so keeping it as an immediate target level. Where am I? Okay, that I am possibly looking or anticipating that the dollar index is going to fluctuate around this range for now. And then once it breaks above 104.50, we could see it hit 104.80. This retracement is not really a big issue because it did test that 104.50 level. And usually when it tests I wouldn't say it's a key level, but a notable level at 104.50, we will anticipate some retracement before a continuation to the upside. Adjusting this trend line, let's see. If we did bring it down to this point, it would still work, right? Still work for that support to push higher. I do realize that we have a lot of lines. We will come to a point where we'll clear out those lines below. So right now, I was going to say that it might come down and test this trend line before pushing back up, but I don't think it'll be that. So I was going to say that it might come down, test this level, and push up, but I don't think it'll be that significant. Okay, so I think that it will just fluctuate around or consolidate around this level, but I am looking for that breakout above 104.50 to climb towards 104.80. So dollar index consolidate below 104.50, possible breakout to 104.80. Okay, there we go. One other thing to pay attention to here is also whether there's going to be any development in terms of the news from the any development on the news from the US in terms of the debt ceiling. Okay, makes sense so far? All good? The trading view stream is still not working, so anyone watching on trading view, I hope you'll be jumping onto the YouTube channel, because I have no idea why it's not working. Okay, so with that, then we'll look at the Kiwi dollar first. Kiwi dollar, we were looking at this yesterday, thinking that if it could come down to this 0.6 level, did do that, but consolidated before trading down to 0.6. Now looking like a bit of a rebound. So that didn't happen, but take that away. Right now looking like it's pushing back up slightly. Also on the Kiwi dollar, what I would be looking for, I mean, we're anticipating further dollar strength, right? So we will still be looking for the Kiwi dollar to break to the downside. That's my resistance. I don't think it will go up to 0.61. I'm just thinking, where would it turn? Where could it reverse from? Right? with that previous level there, I think that at the very most, hey Jordan, will the debt deal push the dollar index higher or lower? It would most likely push the dollar index higher. Looking at it, that's why we're anticipating that the upside to continue. Um, Most likely the debt deal is going to have little impact on the dollar, going to have more impact on the indices instead. So I do think that we're possibly going to see the dollar index continue to the upside, possibly I wouldn't say regardless of the debt agreement. Oh, okay. Thanks for that, Jordan. So I don't think it'll be because of the debt agreement. It's only if there's a big default, which is sounds very unlikely. We might see that impact come onto the dollar. But I think that overall, we're possibly looking at the dollar index continuing to the upside. So as I bantered on, the Kiwi dollar did show some some retracement back down. I was going to say that at the very most, we could anticipate for the Kiwi to hit and turn down. Okay, but it does look like it's retracing a little bit right now. I would say that you want to wait for it to retrace, right? Wait for it to retrace and then look for selling opportunities. Dollar index is still pushing up, so there's no reason why we should see the Kiwi dollar push up so strongly or very strongly. Best, you could look to sell down. If it does continue up, you could to sell down 0.6065. Relatively tight stop at about 20 pips. Take profit could come down to 40. So if it does trade up, fail to break above that point, sell down, you could be looking at 0.6065, 20 pip stop loss, 40 pip take profit. If it doesn't push to the upside, if it just sits right across and starts pushing down, then I'll only look to sell below 0.6020, right? I'll be looking to sell down from this level down to, let me see. So that's the 50% level. We could see big downside if it does break this 50% level on that previous move. So I think what we could be looking for is this move first, right? Look for it to push up, complete that retracement, sell down, maybe about 606. You could do 6060 just to be a bit safer. So about 15 to 20 pips, 20 pip stop loss, almost a 40 pip take profit to the downside. Okay, so Kiwi dollar looking to sell from 0.6060, stop loss 20, take profit 40. Okay, needs to complete that retracement first. Then moving on to the Aussie dollar. Aussie dollar, I was selling this down earlier today, right? Because it went up, hit that resistance area. So you can see that it went as high as 6558, right? Stayed below 6565 and then started turning down. I was selling this to the downside, but right now it hit that equal low, right? Hit that round number support at 0.65. So I got out as it came to that support level, and now it is bouncing back up. Very similar to the Kiwi dollar is that you could be looking for this to retrace before turning back down. I think that if we are looking for that retrace to sell down on the Kiwi, then maybe on the Aussie, a safer bet will be to look for it to break below 0.65. If it does break below 0.65, then you could be looking to sell down, say 6490 to be extra safe. Stop loss 20 to 30 pips. Take profit could go down to, I don't think it will move that whole 100 pips to the downside. It would be nice to sell it down for 100 pips on the Aussie dollar, but I don't think that's going to happen easily with no major news. I think that an interim level would be maybe about 6445. Okay, so you could be looking at that. Back to H1 time frame. Sorry, I'm moving the charts around a lot, but just to check. So we could be looking at that 40 pip again. So 20 pip stop loss, 40 pip take profit, down to 6445. Okay. So looking at that Aussie dollar pushing down, Kiwi dollar possibly showing the same thing. So if the Kiwi dollar doesn't trigger, then at least you know you have the Aussie dollar that could trigger quite quickly as well. So it's an either or scenario. Buba asked the question, can we utilize sell limit on the Kiwi dollar? I wouldn't. I think that it seems a little bit right now with the current price action, it seems a little bit unlikely that it will do that. And then if it does break below this 0.60 level, we could see it trade down, but I would prefer the Aussie dollar compared to the Kiwi dollar for that move. Okay, so make a choice based on the price action either on the Aussie or on the Kiwi dollar. So Aussie would be 6490, 20 pip stop loss, 40 pip take profit. 0.6490, stop loss 20 pips, take profit 40 pips. Right, so how I look at this, or how I plan this, is that if we see the retracement continue, right? Oops. If we see the retracement continue to the, to retrace higher, then I'll be looking for the Kiwi dollar to sell as it completes that retracement. If the retracement doesn't continue, or we see the dollar index pushing up as we're seeing right now, then I'll be looking to sell on the Aussie dollar. It'll be an either or scenario. Then onto the yen, right? A little bit disappointing on the yen. I was looking very keenly to buy the yen up as it came towards that previous high. This was in the previous hour. It was shooting up. So I saw it bounce off this support level of 104. I saw it as a bit of a that alignment or confluence with that trend line. So I was looking at this pushing up and I was thinking, great, it broke above that previous high, yesterday's high at 140.50. Then I was thinking, okay, if it breaks above 140.90, which was that level there, I would be looking to buy it up. Went up, formed a tail, and then pushed down. So that idea is now invalid. It is bouncing off this level. So what I'm looking for here on the US yen would be a lot more weighting. Okay. If I zoomed out, you can see that this trend line has been working quite nicely. Started there, bounced off over this point. Right now, bouncing, looks like it's bouncing off again. Not ready to enter a trade yet, but I would hold as a very safe option. I would hold this view that if it does break above 141, you can look to buy 141.20 up towards that 142.20 level. So 30 pip stop loss, 90, almost 100 pip take profit to the upside there for the US yen. All right, and this will be something that is not ready right now, but it will be something that I'm watching quite keenly. You all know I love trading the US yen, especially as it breaks out to the upside. So I'll be watching this quite keenly. I do anticipate that it's going to push up, especially if the dollar index does trade higher. So that view, buy above 141.20, stop loss 30, take profit 90. I would still maintain that view. Okay, then onto the pound dollar. Right, pound dollar, we were looking for that breakout potential. It didn't, it just came to that level and then it went up. So I wouldn't say that it would have triggered our trade, or if it did trigger our trade, we've hit a 30 pip stop loss. That would still be reasonable as a possible trade. So I'll take that away. Moving this right across, that would still make sense. Take that away for now. And we can see that move still working out. So on the pound dollar, so long as it stays strongly below 1.2350, I'll still be looking for downside potential on the pound dollar. Anticipating that dollar strength, what I'll be looking for here would be 1.23, below 1.2330, stop loss 30 pips, take profit down to 50 pips. Let me just check this support level that makes sense here, which was what we saw on the 3rd of April. So just sold euro and gold, very nice. We'll jump to that shortly. So I think that I would still be looking for the downside on the pound dollar. No reason for me to expect it to retrace strongly. So I think that 1.2330, stop loss 30, take profit 50 would be reasonable. 1.2330, stop loss 30, take profit 50. Okay, I'm considering whether I can get in a little bit earlier. I don't think, with the way it's bounced off this level, I wouldn't be looking to get in a bit earlier. I'll be a bit safer and expect it to break down before I'll look to sell. Break that low, break today's low before I'll be looking to sell down. All right. With that, then looking at the euro dollar. Right? Euro dollar actually traded quite nicely. Yesterday we were looking for it to come down to that 1.07 level. In the Discord channel, as it broke that 1.07, I was sounding out saying that the euro dollar was leading that charge to the downside. It's continuing on that charge to the downside right now at 1.0673. If you are in the euro dollar to the downside, you should be in the money already. If you didn't get in, then I would check this, the Bollinger Band. I think that it could slow down at this point. It might retrace a little bit before continuing on to the downside. Right? Ultimately, what we're looking for here on the euro dollar is that it could trade down to that 1.0630 level. I would like to see it retrace a little bit. Actually, let me just check the 15-minute. Right, I would like to see it retrace a little bit. I think there might be a brief retracement, not a lot. So I would like to say that you could be looking to sell down, looking for it to retrace the 1.0680, looking for a brief retrace, 1.0680, 25 pip stop loss or 20 pip stop loss for 50 pip take profit to the downside on the euro. Ultimately, still looking for downside on the euro dollar. Okay, so we were scalping it down to 1.07. Now that it's broken 1.07, We're looking to sell 1.0680. I think I got that right. 80, yep. And look at it retracing a little bit right now. 25 pip. You could even do 20 pip. I would say 25, right? 25 pip, just because I want it over that 1.07 level. So look for that retrace and then look to sell down. So 1.0680, 25 pip stop loss, 50 pip take profit, makes sense. 25 and then take profit 50, right? So we are looking at relatively tight ranges so far on the, on the Kiwi, on the Aussie. We're still looking for that move, but being a little bit more conservative in terms of the take profit levels for now. Then, as we look into the US Swiss franc, it shot up always because of that, again, because of that dollar index pushing it higher. Look for the hour to close. This one, you have to be patient, right? It came to this point here. So you have to be super patient on the US Swiss franc. Again, you can see that it is way outside of the Bollinger Band. I would say that it's going to retrace a little bit, but if it does stay above 0.9070, what you could be looking for is a buy. Look for it to retrace, but you could be looking to buy 9080, about a 40 pip take profit, a very tight stop loss here, maybe even 15, no more than 20 pips, right? So you can say even a 20 pip would be very generous because it's breaking above that very key resistance, right? So you can see that over the last couple of days, failed to break above. So if it does break out, we could be looking for this to continue to the upside. So 0.9080, 40 pip take profit, 20 pip stop loss. Right? There we go. Buy 0.9080, stop loss 20, take profit 40. Makes sense so far? All good? Let me know. Okay, I'll be happy with that. US CAD, right? We were looking for it to take this away for now. We were looking for it to break to the upside. It didn't actually do that, right? It tried and then came back down again. So I'll take that away. But what you should notice here is that as much as it did break down to test 1.3568, it very quickly came back within this range. Right, very quickly came back within this range of staying at that 1.36 level. Thanks for that, Suki. Thank you, Diana. So it stayed about that 1.36 level. Again, very oddly, as much as we're seeing the dollar index pushing up, we're not seeing the US CAD push like what we're seeing on the US Swiss franc. But what you would also notice here is that, let me just check something. Okay, you can see that it's around, no, it's broken that level. So that 50% level held. Okay, so let me do this, show you something. You could be looking at it sitting right there. What I'm looking for now is we have not a perfect version of this, but a little bit of a consolidation, a breakout. It might consolidate there, might push down a little bit, but it's forming a bit of a skewed head and shoulder with that neckline at 1.3610. So again, if it does push up, then we could see, first off, a brief move of 30 pips to that resistance level. Right, so you could be looking at a very tight stop loss maybe 15, 20 pips for that 30 pip move. For me, I wouldn't be looking for that push or to enter into that trade. I would be happy to see this trade up, right? I'll be happy to see this trade up, but I would be more keen, especially if that dollar index continues trading up, then I'll be more keen to see what happens at this point of 1.3645. Could it push up towards 1.37? Okay, so what I'll be looking for is about 1.3650. Take profit about 40 pips, stop loss about 20 pips. I'll be looking for that move. So it will be, as it pushes up, it'll be my first warning telling me, hey, we could see further upside on the US CAD. Then if it breaks above that resistance, then that'll be a trade I'll be looking at. So 1.3650, stop loss 20, take profit 40. Steve just got onto the euro dollar. 1.3650. Is it 50? Yep. 20 to 40. Okay, there we go. You guys sharing your trades, making me excited. I feel like I should be getting the trade too. Okay, I would, so how we look at this, although it did come to that level that we were discussing, for me, I would have waited for the candle to close. So I look at this as it might retrace a little bit more, right? Might retrace. I want to look for it to retrace before turning back down. As well, we see the candle closing on H1 time frame. You can see it coming back into that Bollinger Band before possibly pushing back down again. Okay, so I would have said that it's a little bit early, but it's okay if you're happy to take on a little bit more risk. Still a reasonable trade entry there. Then on to, I want to look at some of the yen pairs as well, but we look at gold first. Right, so gold did not consolidate. In fact, it was very weird. It spiked up, came back down. You can see why as well. It spiked up way outside Bollinger, hit that resistance, came straight back down. And then right now, still sitting at 1936 at that support level. If the dollar does continue pushing to the upside, then naturally we're going to expect to see gold trading lower, right? That inverse relationship between the dollar and gold, dollar strengthening, we're going to see gold trade lower. Continuing on with what we have been seeing on gold, that downward trajectory. Okay, I'll take away, I want to keep 2000 here as a resistance, and the levels still makes sense. Okay, I'll take away this one just to clean up some lines. At this point, if it does break below this level, then the next level to watch out for. So like Sirin who sold gold, if you're looking at this, then you could be on a bigger move. You could be looking at almost back to that 1910 level, right? 1910 level would be interesting, but or to be more specific, maybe 1915. There are a few levels here, right? You can see that there are a few levels in here that you might want to pay attention to. Why I said 1915 is just looking at that previous swing high and then those points there. So 1915 would be a reasonable point, but I do think that it would have been a little bit early to enter into that trade. It is still at that 1936 very key support level, right? Why is it very key? It came down, tested, bounced strongly, broke through, now retraced. Might be a little bit early, but if it does break through, by breakthrough I mean below 1933.22, then we could see it come down to 1915. Okay, so gold needs to break below 1930. needs to break below 1933 before it could trade down to 1915. Might be a lot of downside there on gold, so something that you could be watching out for. Right, definitely something I'm watching out for to scalp it to the downside. Okay, so that's the views on the majors for now. If there's any updates, I will put it into the Discord channel. Let's look at the euro pound. Euro pound is dropping strongly. So this was something I was watching earlier on. You know, as it tested that resistance, we're looking for that downside. And then now that it's broken this previous point, now that's breaking this previous point, this let me just drag this right across in this point here. So it tested this level, tested here as well. Now that is breaking through, possibly looking at that further downside. You know, we're looking for that euro dollar to drop. A couple of you did get into the euro dollar to the downside. If the euro dollar does drop strongly, then we could see the euro pound trade down as well. Looking at it on the H4 time frame, the next big support level would be at 0.8570, right, where you could be seeing price. So if it does drop or if it does break below this major near-term support level, now turned resistance, we could see it trade to the downside. Yesterday, a couple of members were asking about, you know, swing trades. I think this would be a reasonable trade. 0.8640, stop loss maybe about 30 to 40 pips, 30 pips, maybe take profit down to 60, almost 70 pips to the downside to that major, to all that consolidation out there. Okay. Then, as we were looking at the pound yen, as we were very interested on the pound yen for that correction, it did not happen, but it is finding a little bit of a toppish, or it is showing a little bit of a toppish feel right now. I think that it's still a little bit early. It's right in the middle. It climbed up to 174 as a resistance. Failed to break higher, consolidating with wide consolidation. What you could be looking for is that if the pound dollar, look at the pound dollar, right? If it does show that breakout to the downside, then pound yen could trade down from aggressively. You could be looking to sell down from 173, but I would say a safer bet would be 172.80. So you could be looking to sell down 172.70, you know, 60 pip take profit, tight stop loss at about 30 pips to the downside, just looking for it to come back within that range. Okay, and then onto the euro yen, euro dollar trading down. This would still maintain. I would just drag it right across and say below 149, it needs to close. Aggressively, you could be looking for it to close below 150. Not really now, but if it does close at about 149.80, you have a 40 pip stop loss, 80 pip take profit, maybe even a little bit of a 90 pip take profit to the downside. That would be a reasonable move on the euro yen as well. Makes sense so far? Any questions? Any other pairs that you'd like me to look into? Seem to be breezing through these analysis nowadays. So let me know if there's anything else we should be looking at, right? So Aussie dollar still showing some. So what I'm looking at now is that with the way, about 10 minutes to the hour close, might see this trade up, test, and turn down. Might be a first trade, Kiwi dollar look to sell down. And then after that, as it pushes down, you could be looking next for the Aussie dollar to break the support and then sell down. Meanwhile, waiting for the yen to push back up, right? So that's a 3 trade combination in terms of scheduling the trade. Pound dollar not ready yet, still within that range. Euro dollar retracing, right? So it was a little bit early, so it's retracing. Looking for it to close. I think if it does closes at this level, it'd be quite nice. So it closes at this level. Next one could continue that push to the downside. All right, US Swiss franc retracing, looking for it to continue up. US CAD looking like a good setup, longer term setup there. Okay, then on to the indices. Let's have a quick look at all the indices across the board. Godfrey, we did pound dollar already. Right, so it bounced off that consolidation to the upside, still looking a bit toppish at that 4200, 4220 level. I do think that we might see it trade back down. So take that one away. I do think that we might see it, same like what happened here, might see it trade back into that 4100 consolidation level. Same thing as a sitting consolidation on a US 30, could push down. Actually, it looks interesting here where we are seeing a little bit of a pattern where it's doing that after this push up. So we might see this break down from here. Okay, then onto the US 100. Oddly looking at it pushing up, I think on a bigger time frame, still looking at maybe more upside, but I think it'd be a bit cautious there. Okay. Yep. So how about answer your question there, Diana? Right across the board on the indices. I know a couple of you were sharing about Bitcoin before. We did see a big spike up over the weekend, right? Because of all the uncertainty on the dollar and the debt ceiling. We did see that big spike up. It was over the weekend, it was at about 26,800 level. Big spike up, went as high as 28, almost 28,500, 28,450 before retracing. I think that if we do see that dollar strength continue, then that's possibly going to have that inverse relationship with Bitcoin and push prices back down towards that 26,778 level. All right. Any further questions? If not, what I'll remind you all to do is click that little rocket ship button on TradingView. If you're on YouTube, help me out, click that thumbs up button, the like and subscribe button. And if you haven't already, do join the trading community, and then we'll catch up more, have discussions, continue our discussions in the trading community. And with that, trade well, trade safe. I'll see you all in the community. If not, then at 3 p.m. tomorrow, 3 p.m. GMT plus 8 tomorrow for our daily analysis. Take care now. Thanks, Steve. Thanks, Jeremy. See you, Val. Thanks, Diana. Bye bye.